Hi, everybody. I am Stephanie Dorsey. I'm the CEO and co-founder of Margins Capital. And in honor of Black History Month, I'm excited to share with you all a series of conversations with Black professionals in the alternative investment space. One of the reasons why I founded Margins Capital was because I wanted to give access to my network of amazingly talented brothers and sisters. These conversations represent just a tiny sliver of or sample of the rock stars who are out here getting it every day in the investment space. And they might not have reached billionaire status yet, but I have faith that they will. The finance industry is notoriously closed off from the mainstream, and in light of the fact that we have to fund our own retirement, we're living longer, and truth be told, a lot of us are playing catch up. At Margins, we believe that we should have more information about finance and specifically alternative investments. So my associate Aaron and I had the pleasure of interviewing Robert Holley, who is the newly appointed executive director, of the Baltimore City Fire and Police Employee Retirement System. He has over 20 years of experience in the finance industry, and he's a super humble guy who just so happens to manage $3.25 billion for the city of Baltimore. Take a listen. Hey, Robert, how are you?
I'm doing just great. Thank you for having me.
Oh, I'm so happy to sit and talk with you and for everyone to know all the coolness that I know about you.
Sounds a little bit overrated, but I appreciate it. I appreciate the endorsement.
No problem. So listen, maybe we can just start. You can tell us a little bit about your personal story, all the way down to when you were a wee chap, to
Sure.
now.
I will give you the very audited and edited version. I was born and raised in St. Louis, Missouri. From there, I attended Stanford University, where I studied public policy, thinking that I was going to get into public service, but I ended up taking a detour on Wall Street for 14 years. So I primarily worked in institutional sales on Wall Street, pretty much all products, be it stocks or bonds or futures and options, and selling to a number of different institutional clients. So that could be money managers, hedge funds, pension funds, and the like. So following a 14-year career on Wall Street, I then went into money management, specifically with the Office of the Illinois State Treasurer, where I managed a bond portfolio of about $5 billion. And then following up on that, I came to the Washington, D.C., Baltimore area, where I spent the majority of my career managing pension funds. So I most recently have been with the Baltimore City Fire and Police Employees Retirement System, where I started out as a senior investment officer. I managed the entire investment program for our $3.25 billion plan that covers the first responders of the city of Baltimore. And just recently, about 2 weeks ago, I was promoted to the executive director of the organization. So as of October 1st, I am the executive director of the plan.
That is amazing. Okay, wait. So what made you leave sales to getting into more of a money management or, that in that role?
Yeah, well, when I left sales, it was really the great financial crisis or shortly thereafter. Obviously, a lot of Wall Street firms had been overexposed. Mine was not an exception and probably a headliner in terms of its exposure to a lot of the nefarious and just bad mortgage and housing loans and securities that were created during that time. There was after several restructurings, I jettisoned the firm, and that really led to kind of my search for a different position, and it led me back to kind of that government sector, working for the Office of the Illinois State Treasurer.
Which it doesn't marry what you thought you would be doing going into public service, but also your wonderful experience on Wall Street?
It definitely does. It definitely does. I after 14 years, on Wall Street, I didn't think I would ever really get back to kind of that government sector, but I most certainly did, and it's very much dovetails into my training and experience.
I love it. Okay, congratulations on the promotion.
Thank
Big
you.
deal. That
Thank
is a big deal. So help me understand, how does what you do now as executive director differ from what you did before the promotion?
Sure. So just for basics,
Yeah.
in terms of what a pension fund does in general. So for a lot of laborers and workers, they out of every paycheck they will deduct a certain amount from your paycheck to contribute towards a pension fund.
Mhm.
At the end of your working years, essentially, your contributions to that fund will then be dispersed to you throughout basically the remainder of your life. At this point, it's probably rarely a dollar for dollar return, meaning if I, ended up contributing over the course of my working life, $400,000, it's rare that you will get that $400 back. However, what our job in managing the pension is to make sure that we receive all those contributions, we invest the money, and that those returns are then invested back in you at the end of your working life or at your retirement. And in my case, we service the first responders of the city of Baltimore. So for firefighters and cops in the city, there's a deduction from their paycheck each pay period. And at the end of their working career, they apply for the pension and they receive a monthly pension contribution that goes towards their income and their day-to-day spending life.
Yeah. When you say it's rare that they get all the money they invest, they put into the pension, is that because people might not live long enough to get it, or
it's a number of factors. I guess what I was more saying, not in terms of it's not dollar for dollar. I guess it's not dollar for dollar in terms of your salary. So
right.
if you ended your career at a salary, as a sergeant or corporal or whatever,
right.
It is, and you're making $100,000, your active work check is not going to equal your pension.
Right.
And,
right.
That's by design and by law to make sure that there's ample amount to cover all of the retirees that are, retiring, and then, also cover people in the system and make sure that the contributions are able to support, kind of the retirement and dignity for those who served.
Yep, that makes sense. So it seemed like when you were on Wall Street, you were selling some alts, right? But you were doing a lot of public equities. I would imagine, especially now at Baltimore, your portfolio is a mixture of all the things as well.
Yeah, so we currently have about, like I said, $3.25 billion under management. We're invested across really all different asset classes, maybe with the exception of commodities like gold and silver and things of that nature. But we do invest in alternative investments, which are different than your public stocks and bonds, where we will contract directly with a investment manager who is skilled at taking over companies, restructuring, lending, any type of funds out there that have various strategies.
Okay. And so you work with a consultant so tell me, can you walk me through what what is done typically in-house versus what's typically consulted out? I think I heard a story about New York Common and how their real estate is totally different, because you can imagine real estate in New York is a beast onto itself, and it's separated from a lot of the other alt space, and they have different investment committees and whatnot. So I'm just curious, what's done in-house versus contracted out?
Sure. So, as opposed to a very large fund like a New York Common, we are very small in comparison. So we don't have all the resources to do a lot of our work in-house.
Got it.
So for a lot of the due diligence, manager reporting to let us know kind of where we stand at any given period, we rely on an investment consultant.
Got it.
So our investment consultant does a lot of different work for us. Anything from sourcing investment ideas to reviewing different investments already in our portfolio, and giving us direction kind of as a plan as to what areas we should either continue to invest in or divest from.
Okay, got it.
So again, everything generally that we do in terms of our investments is outsourced, meaning we do not have any staff on hand that is trading bonds or stocks or, directly investing in, private equity or private credit or anything of that nature. What we do is contract with managers who have expertise in the space and allow and allocate funds to them. And so the allocation process is something that is, very complicated and has to be very precise in order for us to meet our return objectives.
Yep. I love that you said that. I think the average person who doesn't work in finance is probably a little intimidated, but because they think they need to know all the things, and you don't. Like, you just need to know the things you need to know, and you need to know where to find the experts who know the rest.
Yeah, I mean, there's definitely a lot of relying on experts. I guess when you're in a seat of where you're allocating funds, while you certainly don't have to be, the subject matter expert on any number of different strategies, you do have to have a general understanding of, what the asset class entails, what the expected returns would be, and how, if you were a manager in that space, how you would go about investing and achieving those returns.
Yeah.
And that's how really you evaluate different managers.
I love it. So going back to your new role as the executive director, because unfortunately I derailed us a little bit. So what does your new day-to-day look like compared to what you did before?
So it's just additive. So before I was primarily responsible for all of the investment functions within the office. So that would include everything from finding new managers to allocate to, getting updates from our existing managers, designing the portfolio, and really working with our investment consultant on any type of reporting or different internal initiatives that we may have as an investment arm of an organization.
Yeah.
In my new role, I am head of the entire organization. So that not only includes the investment portion, but also things like legal, accounting, and really what I would kind of describe as kind of the engine of the entire system, which is our member services. Yeah. So, at the end of a fireman or policeman's career, they come into the office, receive an estimate of their pension contribution and their pension amount that they will be entitled to, sign some documentation, and we're responsible for those payments in perpetuity. And so making sure that our members are taken care of is kind of number one priority.
That is very exciting. And I'm going to say this. I mean, the fact that you have Wes Moore as the governor of the state of Maryland, and now you're the executive director over, it makes me very happy.
I don't know if that's a one-for-one comparison, but it is certainly nice. And I think Governor Moore is doing a great job and getting a lot of support.
I love it. Okay, so let's talk a little bit about alternatives, and I'm going to ask you a personal question that hopefully you feel comfortable answering. Like, do you invest in alternatives, and just how do you feel about alternatives in general?
Yeah, I mean, I think alternatives are great for long-term investors. With a lot of alternative investments, your contribution or your money is oftentimes locked up, meaning it's not liquid. So if I give an alternative investment manager $5 today, depending on the type of investment, it is usually restricted for me saying next week that I want that $5 back. Right. I changed my mind.
Right.
What you get in exchange for the term lockup is that manager's dedicated focus to growing your dollar over that period of time. and they have expertise in different strategies that, have a pretty good track record of growing that dollar, usually in excess of putting it in the stock market or putting it in the bond market. And so for a long-term investor, meaning let's say your horizon for investment is 20 to 50 years, it's a great tool to enhance, kind of investment performance and grow your money. In terms of an individual, addressing your question, do I personally invest in alternatives? I would say no. It requires certain stipulations in order to qualify in terms of net worth, sophistication of your knowledge of investing, and simply access to the managers, which we don't always have.
Yeah.
And for an investor like myself, liquidity is important. And so in order to, the prospect of locking up, tens of thousands, hundreds of thousands of dollars for 10 years is just not something I can stomach at this point.
Right.
However, for a lot of qualified, what they call qualified institutional buyers or high net worth individuals, they do have access to these products. And it's been additive to a lot of their investment portfolios personally.
Yep. Let's see. So you talked a little bit about some of the issues that prevent you from being able to invest in alternatives. And and I don't know if you are aware of, there's this big conversation about democratization and making alternatives accessible to the retail investors. Do you have any thoughts about it? Is it something that you're seeing in your, I guess, personal or professional life?
Yeah, I mean, it's definitely a trend. When you talk about, the word democratization, I think, largely that means bringing the world of institutional alternative investments to kind of the retail world or the personal financial world.
Yeah.
There are certainly a lot of investment products out there now that do feature aspects of alternative investments.
Yeah.
Again, there's some restrictions in terms of not only the ability to access those products, but in terms of locking up your funds.
Right.
But I mean, I think it is overall, whether or not, I have an opinion on it one way or the other, it's certainly a trend that is happening. And certainly a market that alternative investment managers are starting to look more closely at to broaden their asset base and, raise more funds. Yeah. So, it's definitely a trend, and I certainly understand that it is out there.
Will that impact your world at all, your professional world?
I would think not explicitly.
Okay.
The regulation, I guess, of institutional investors versus retail is slightly different.
Yeah.
And so any type of restrictions that, mom and pop might have in terms of investing are largely not the same concerns that an institutional investor like a pension fund would have. However, in the sense that if both an institutional investor and a retail investor's funds are commingled into a single manager, it would have implications. And that might mean anything from, you would just now have retail partners as additional limited partners within an alternative investment fund, or like I said, you just probably need to be aware of any type of restrictions or anything like that.
Yeah, because I saw an article about Blackstone, and this is not the only way they reached that $1 trillion assets under management milestone this summer, but they 5 years ago they declared a vision to make their portfolio more half and half individual and institutional investors. And so that's what prompted my question, does that impact someone like you?
Yeah, like I said, as an asset owner, in terms of the pension fund, I don't think it would have too much of an effect. From an asset manager, like from your Blackstones of the world, of course, they're seeking that opportunity to grow their funds.
Yeah, I got you. Awesome. Do you have any any thoughts about our community, like the Black Indigenous people of color community, thinking, considering investing in alternatives? And if you do, do you have any tips, suggestions,
I certainly don't have any
concerns?
tips.
Um,
Um, but at the same time, and really this extends, to really any community is always, just be aware of the risks of your investment and understand the liquidity profile. Meaning, what is your ability to get your dollar back when you invest. But, in terms of our community, as a whole, I think, alternatives offering a lot more access than in the past, and that's through private equity funds, private credit funds, and to a large extent venture capital. You know, our ability to be in the investor community and investment community is growing. There's always room for more talented and diverse individuals. And like I said, I just would encourage people, if they have an interest, to look into all avenues of investing at the alternative space. Like I said, that can be from venture capital to private equity, private credit, hedge funds, etc.
One last question for you, especially because I recognize as an executive director for any pension plan, but any institutional investor, due diligence and making sure that manager is who they say they are and can perform and do the things they say they can do. Do you have any advice regarding how to conduct some type of due diligence, or some type of due diligence for individual investors?
Sure. I mean, I think, from a large, point of view, there's a lot of tools out there now, not only, Google included, where you can check individuals' backgrounds, investment track record, things of that nature. But at the end of the day, as they always say, it's a relationship business. So really having that one-on-one relationship with anyone you're investing with, that could be on the alternative side or the public side. It goes as granular as knowing your financial advisor at the retail level to knowing the portfolio manager at the largest hedge funds or private equity funds in the world. Having that one-on-one relationship is important, not only for trust but also for accountability.
Yep.
And that's really the overarching advice I would have is to really develop those relationships.
Fantastic. Robert, thank you so much for your time. This was
No
amazing.
problem. No,
All
thank you
right.
so much. I appreciate you guys for having me.
Absolutely. Take care.
All right, have a great rest of your day.
Bye.
Bye now.